Welcome back to another video. Today I'll be reviewing a trade that I did yesterday on gold. Now this trade was actually predicted on a video I did on Sunday, on the 3rd of September, where it was a gold sell. Now as you can see that there's a fair value gap in around where price is currently. Now, price doesn't need to be next to the fair value gap, doesn't need to be next to the market price for it to have an effect on the current price. As you can see, it's a little to the left. Now, we can call that an inverse fair value gap. And when you're marking your charts, you need to be creative. You know, not everything is so linear as you would think it would to be. It's just the area that is the most important. And as you can see, that price respected the 50% level of that fair value gap. So I used it as a resistance to a price. And as you can see, the way I do my analysis is that I do top down analysis. So I start with the weekly. I see where areas of resistance could be, where areas where price could affect price, and I'll be creative with it. I put a 50% level marking there, and price respected it. So because it did that, that gave me one confirmation for a sell. I use the 50% level as a resistance level. Now, as we go down to the daily time frame, you can see that price did use that level as a fake out. Now, what I was looking for was bearish confirmation, and as price started to reject or disrespect lower fair value gaps that was on the market, it gave me a bearish sentiment. And the candle that I'm marking out now is typically a candle which, once it forms another, like an engulfing candle, I don't know if that's the right terminology, but the next candle usually forms lower and it breaks away. So that was what I was expecting for the next 4-hour candle. As you go down to the 1-hour candle, you can see how the candle closes at literally, they respected that grey box that we labeled on the weekly time frame. Now that is evident of how all time frames correlate. On a recent video, I put how it's like in life, how you got different dimensions and stuff. Now, if you were to take that into your life, you could say that, right, everything that you do on each different plane would reflect in your physical life. And that's what we're seeing here on these charts. The weekly time frame has a direct correlation to the 1-hour time frame. And the way I use that is I use the higher time frame as my bias to find my direction. And that's one thing that ICT always says. You got to use your higher time frame to find out your bias. And that's why I don't have many time frames on the top left. I only have the weekly, the daily, the 4-hour, and the 1-hour, because I don't need the 1 minute until it's time to get in the trade. Now this next 1-hour candle, you can see how it's come back and it is retested that smaller 1-hour fair value gap, which is similar to the weekly one that we've highlighted previously. Now you can use those also as resistance, and that's what I typically do, or in this case anyway. Now if you look to the left on the 1-hour, you can see how there's two fair value gaps below price, below that current candle there. Now that is also a confirmation, as that acts as a as a vortex, and it would actually bring price into it. Now these sessions that I'm highlighting now is the London kill zone. You typically want to trade within this time frame of 7 to 10 a.m. New York time, because that's when the most liquidity is, and that's when the New York stock market opens at 9:30, and you would typically get a lot of liquidity during this time, and this will give you higher probable trades. Just basically means that any trade that you put on has a higher probability to actually go where you want it to. Now we've gone down to the 1 minute, and this is what I entered. A lot of times I've seen this before where I've seen this fair value gap form on the 1 minute and I do not take it. But here our TPs are, this is the recent hour low. Now if you was to go on a higher time frame, you could see that there's way more space that I could have gone on the 4 hour. There was another low which I could have targeted, but recently I've just liked to get, you know, easy targets. Now there's another fair value gap where I pull it back right here and enter again on a second entry to where on my MetaTrader, or where I'm going to show you soon, that we took another entry and we pyramided the trade to gain more profit. This is only because that is a high probable trade. As I was in the trade and I was switching between time frames, I seen that the hour candle just wants to go down, and so once I've gone down to the lower time frames and actually seen this fair value gap, I've entered again, and yeah, that was how we was able to be profitable off of this gold move. I'm going to show you the picture now. It's not a lot, to be honest, but now the reason why the numbers are so small is only because I've recently, over the past year, what ICT has shown me, and also Wix, Roger Banks has also said, is that you want to drill in good habits, and you won't be able to do that by entering many funded accounts, you know, putting on a large account and risking, you know, 10% of your account, or even put on £1,000 and risking £100 every trade. There'll be too much emotions into it. But if you load up a small account and you build in the good habits on a 0.1 lot size, you, over the next few years, it'll be second nature to you. And when you're ready to pick up a 100k account, you would still be doing the same things, as just a more larger lot size. So if you're struggling to actually build good habits and to take good trades, you need to drop your account size and trade on a 0.1 until you feel comfortable, until it's second nature to you. And then that's when you go onto a larger account size, you wouldn't have a lot of emotions into it, because you'll just be focusing on the system. And that is what I'm going to leave you today. So thank you for watching this video. If you do like the video, do like and subscribe, please, and leave a comment. I'll see you later. Bye.